Master this. Stop bad trades. What if I told you? You do not need a new strategy. You need a new filter. Most traders do not lose money because they are stupid. They lose money because they enter without a checklist. They enter with hope, with emotion, with speed. Today, I will give you a 7-point entry checklist that profitable traders use to protect their account. This is not theory. This is a daily routine you can follow. And if you follow it, you will stop many bad trades before they start. Stay until the end, because point number 7 is the point that stops revenge trading. Why a checklist works. Let me explain something simple. When you are looking at the chart, your brain is not calm. Your brain is stimulated. Candles are moving. Your heart is reacting. In that moment, you will forget your rules. A checklist is not for smart people. A checklist is for humans. Even pilots use checklists, not because they are weak, but because pressure makes people forget. Trading is pressure, so you need a checklist. That forces honesty. The 7 points. Point 1. What is the market context? Before you look for entry, ask one question. What is the market doing overall? Is the market trending or ranging? If it is trending, your job is simple. Trade in the direction of the trend and avoid fighting it. If it is ranging, your job is different. You either wait for a clean breakout or you trade the range edges with strict rules. Many traders lose money because they trade a trend strategy inside a range, or they trade a range strategy inside a trend. So point 1 is simple. Context first, entry later. Mini rule. If you cannot explain the context in one sentence, you are not ready to trade. Example. The market is making higher highs and higher lows, so I only look for buys. Or, the market is in a box, so I wait for a clean break and close. Point 2. Where is the nearest support and resistance? This point saves accounts. Before you enter, mark the nearest support and resistance. Now ask, do I have clean space to target? If your target is too close to resistance and you are buying, that is not a good trade. If your stop is too close to support and you are selling, that is not a good trade. Most traders only see the setup. They do not see the wall in front of the setup. So this point is about one word: space. If there is no space, there is no trade. Mini rule. If price has no room to move, your risk to reward will collapse. Point 3. Is this a real setup or just a candle that looks good? This is where many people lie to themselves. A candle can look strong, but a candle is not a plan. So ask yourself, does this setup match my rules? Or am I impressed by a candle? A real setup has a clear reason, a clear entry trigger, a clear stop location, a clear target, a clear invalidation point. A fake setup has excitement, speed, fear of missing out. It looks like it will go. Be honest. If your reason is it looks strong, that is not a setup. That is hope. Mini rule. If you cannot write the reason in simple words, do not click. Point 4. Where is the stop loss and does it make sense? Stop loss is not a random number. Stop loss is a place where your idea is wrong. So ask, if price hits my stop, does that mean my plan failed logically? Or, am I placing stop too tight because I want a bigger profit? Tight stops feel smart, but they are often emotional. Good stops feel safe because they are logical. Mini rule. Your stop should be placed where the setup is invalid, not where your fear is comfortable. Point 5. What is the risk to reward and is it realistic? Now check your risk to reward. But do not lie. Many traders draw a target that is not realistic just to make 1:2 look possible. Do not do that. Ask, is the target in a clean area Or is it inside noise? Is the target supported by market structure? Or is it wishful thinking? A good trade has a target. That makes sense. Not just a target that looks good on paper. Mini rule. If you cannot see a realistic 1:2 space, skip the trade. Skipping is a skill. Point 6. Can I accept this loss before I enter? This point is emotional discipline. Before you enter, pause and imagine. Stop loss hit. Now check your body. Do you feel tight, angry, nervous? If yes, your risk is too high, or your mindset is not ready. Professional traders accept loss before they enter, because the moment you click, you buy uncertainty. You cannot buy certainty in trading. So do not demand certainty. Accept risk, then enter. Mini rule. If you cannot accept the loss, you cannot take the trade. Point 7. What will I do after the trade? This is the point that stops revenge trading. Ask yourself two things. If I win, what will I do? Will I stay disciplined? Or will I get greedy? If I lose, what will I do? Will I stay calm? Or will I chase the next trade? Most traders think only about entry, but professionals think about behavior after result, because trading results change emotions. So you must pre-decide your behavior. Example rule. If I win, I do not increase lot size today. If I lose, I stop and review. Max 1 or 2 trades per session. When you pre-decide, you protect yourself from yourself. Mini rule. If you do not have an after-trade plan, you are gambling with emotions. The daily routine. How to use this. Now you might ask, how do I use this checklist daily? Simple. Before every trade, open your notes. Write. Context. Nearest support and resistance. Setup match. Stop logic. Risk to reward. Risk acceptance. After trade plan. If any point fails, no trade. That is the rule. This is what makes you consistent. Not intelligence. Not indicators. Not predictions. Consistency comes from filters. Common mistakes, so you don't cheat. Let me show you how traders cheat themselves. They do the checklist after entering, not before. They adjust the checklist to fit the trade, instead of adjusting the trade to fit the checklist. They say this is close enough, and then they pay the price. If you want results, do not negotiate with your rules. Closing strong end. You do not need more trades. You need better trades. And better trades come from better questions. This 7-point checklist is your daily shield. If you follow it, you will trade less, but you will trade cleaner. And clean trading builds confidence. If you want the printable version of this checklist, comment checklist below. If this video helped you, like the video, subscribe, and share it with a trader friend. Remember, your job is not to predict the market. Your job is to protect your decisions.